Hey, Wealth Warriors, are you ready to redefine wealth and master your money mindset? Welcome back to Women of Wealth. I'm your Gen X co-host, Hawley Gray.
And I'm your millennial co-host, Allie Ramo. Today's conversation is going to be a fun conversation about a creative way to fund a business and the importance of quality benefits for small businesses.
Yes, and we're joined with Pam Cytron. You may recognize her as she was a previous guest.
Pam has so much knowledge. We had to have her on for part 2.
Pam, welcome back to Women of Wealth. For those of you who may not heard our other episode, you can give a brief introduction into your background and what you do now.
Well, thank you, ladies, for inviting me back. I had a great time, and I've had some wonderful conversations intermittently with you guys since our last show. So thank you for entrusting me with another day. For those that don't know who I am, my name is Pam Cytron, and I am a long-term liver of financial services. So starting very early in my career, at the age of 17, 18, starting to sell health tech and fintech when that wasn't even such a thing, but have grown my career through building technology, participating in companies that have built those companies, including founding a couple of my own companies in the financial services, but more specifically within the wealth tech scenario. And I qualify that because I think that we've landed in this fintech world where everything is in a massive bucket. And if we don't start looking at the segments in the segments, it causes a lot of confusion. Most notably, 2.5 years ago, I had the blessing of being able to say, what could I do to give back to the world? Because I'm not done yet, by the way, ladies, but I have had a very blessed career. I've been able to travel all over the world, both with my own companies and others. And one of the things that I've always been is a salesperson at my core. And so we created a wealth tech accelerator, but our specific wealth tech accelerator is focused on growth. And what I mean by that is we are looking for companies and founders that have already established product market fit, maybe have those first 2, 3, 4 clients, but how do we help them grow? So this is not about a capital raise. This is not about a showcase. This is not about a trophy. This is about putting product makers and product buyers together in a very accelerated time frame to be able to do that. And I'm pleased to say we will celebrate our 3rd anniversary in June of this year. And out of the 30 companies to date, we have 6 more to go. We're selecting now. We've had 5 exits, 1 recapitalization, raised over 93 million across those companies, just not because we were helping, and then also, but most importantly, have helped them solidify and form relationships at an accelerated pace that they might not have been able to do, both at a large scale, like a major, wealth manager that we all know, to a small IRA, and being able to help them. And that's kind of my give back, and that setup is a nonprofit. And lastly, I do have a company that's coming out of stealth in about 2 weeks.
Oh, excited to hear more about that. The last time after our conversation, or we stopped hitting record, you shared that you funded your first business with your whole life policy. And so I was immediately thinking, Pam's got to get back on here and talk about that, since that's Hawley and I's core business. How did you get the policy? How did you decide that the whole life policy was for you? And then when did you realize you could use this for more than just a death benefit?
Precisely. So the policy itself was purely by accident. My friend graduated, was selling for an insurance company, and phoned in a friend, right? And so this friend said, fine. So I bought whole life, disability, everything he was selling, I bought. Okay. So if you go into my little portfolio, I got term, I got that, but I had 2 whole life policies, variable annuity and a whole life policy. And I also had long-term disability. And so I will give you guys a brief commercial for insurance, and then I'll tell you what led me to seeing that as an incredible source of capital, which I would certainly recommend anybody look at. But, when the by accident was buying the policy. But not only was I able to use my life insurance policy, and how we're going to talk about that now, I also have my long-term disability. I'm also a big believer in that, because I also unexpectedly had cancer more than once. And there was that disability policy kicked in. But also the important part, and why I raised that, is because I was in my startups during both of those. Okay. And so this insurance product became a very, very monumental piece of survival in a startup. creation and survival. Okay. And so, and I work with a lot of founders now, but when you start out and you're building your first company, right, you look at your capital options, you look at your savings, you look at your friends, you look at your family, you look at whatever equity you have, vehicles, right? And I think that, and it's more so today than before. And I would also say, I think it is Women's History Month, so I'll put a plug in there from a women's perspective, since it is the second day of, or third day of Women's History Month, right? I also think women tend to look at how they look at capital differently. Our first thing is not phoning a venture capital guy. Our first thing is looking at, what do we have, building that MVP. I think we tend to take a more conservative approach to that early stage of that, right? And so when I looked around, I don't have much family, and there's certainly no money in that family. That's why I was working at 17. Okay. So no money there. So that family thing, ixnay on that. And then certainly at the time I was starting my first company, my friends were either starting their own and or building their careers, right? So, you have to be able to look at where that comes from. And the younger you are, your network isn't as powerful as it might be, what I would say mine is today, right? And so there's vehicles that you can look at, but when I looked at it, I looked at where I could borrow against something. And so when I looked at the details of the life insurance policy, right, it was the opportunity where I had no early withdrawal penalties like my IRA or my 401ks. I looked across my retirement. I had no real control. I had more control over repayment terms. Okay. So there was all of these characteristics, flexible capital. I didn't need board approval. There was no dilution to what this was. I didn't need any personal guarantees like you might at a bank. And there was no credit committee, right? And so that really led me to looking at how I could look at liquidity at the early stage, but I also was mindful to making sure that I didn't violate the benefits of that, because it still had a long-term impact for what I bought it for from a life insurance policy. And then I looked at the risks and responsibilities to that, right? So even though the loan did accrue interest, I still had the ability to manage how that was, right? And where my payback was. And it was a different level of discipline and understanding. But I must tell you that I don't think I looked as much at the discipline and understanding of the payback and things, but certainly from a vehicle perspective. So I've been a big proponent of what some of these policies can do, and why, when you look at a younger age, right? I'm at a point now that if I was looking for life insurance now, a term policy would probably be the right thing for me right now, right? But I think when people are young, we don't spend enough time educating them to what the benefits of those types of policies are. And people just go out and buy term insurance because they think they're just protecting themselves from death.
Yeah.
Instead of protecting themselves or rewarding themselves for life.
Yeah. And I mean, the policies change pretty regularly as far as what the benefits are, living benefits being included. And so I think it's really important to continue educating. I mean, I have both because of, just the way that I have built some of my strategies. So I have term and I have permanent insurance. The good news is you can have multiple policies, and they can all have, you can stack them on top of each other. And then when you get to a certain age, maybe you don't need term anymore, or maybe you don't need the permanent policy anymore. You can close that because you've used all the benefits out of it, or whatever the case might be. I had a gal during COVID. She was 30. She was 21 when she got her policy, and I must have re-enrolled her, I don't know, 7 times to keep her policy. And thank God she did, because she had congestive heart failure. She'll probably never be eligible for life insurance again. And unfortunately, she closed the entire policy, even though that was against my advice to her. However, people do what they need to do, because she needed to get completely retrained. She was in the tech space as well, and she couldn't remember the formulas anymore because of the medication that they had her on. So she had to get completely retrained, but she took the entire, $390,000 or whatever it was that they offered her. And I just think that it's great that she had that, but unfortunately people aren't educated enough to know to keep that in place, because we might be able to build that cash value and that life insurance back up, even if you take the benefit out.
Well, I do think there's a lot more education going on. Now, I will tell you a mistake that I made with it, right? Was that also, right? Because I was young when I got it. And so it was very aggressive in equities, right? And then I was going, but I also didn't have the best advisor that was helping me. In fact, you guys forced me to go look at all my stuff and in preparation for this. And so maybe you guys are going to be able to help me out, because I probably can use, even though I'm in financial services and that, we all need the right people to help. But one of the things that I did learn is also, what was I invested in? Right. So when those interests, when you're making interest, where it was, and right. So when we were young, you wanted to be very aggressive. Right. But what I didn't do along the way probably is properly, and it's an education thing again, is rebalance my portfolio. Right. And I probably should have and someone should have advised me to rebalance the portfolio once I took the loan. Okay. And looking at that more equationally. So it wasn't just a slam dunk that I did it all perfectly, but I will tell you that I've told my kids, I've got my kids buying life insurance, right? I do believe that the vehicles that they offer, and I do think that, the richer you get, people get a little, snooty to the insurance side of this versus the asset side of this. And I think that they should totally coexist. And the younger you are, I think these are the benefits that we should be properly navigating, right? And it's not just, some influencer online, and it's not just a robo advisor. And that's, we can come on to tech later. But I do think that these are certain education things that are missing a generation because of the way they're consuming their information.
Yeah, for sure.
Well, Pam, I will want to switch gears a little bit. We had a conversation about small businesses providing employee benefits, and you are a huge proponent of, right off the bat offering employee benefits. And I thought that was an interesting take. So tell me a little bit about your experience in advising new startups and how to treat and hiring and employees.
So when I look at what you put in place in a startup, okay, and many, leave that to be the last thing. Okay. And when I say that, I'm talking medical benefits, I'm talking retirement benefits, I'm talking all of these types of things, because they come with a cost. Okay. And a cost, frankly, that most venture capital guys and so forth, I won't call anybody out, right? That's not where they want you to put your dollars. Okay. But one thing about entrepreneurship is it is a team sport. Okay. So I also have this whole thing about solo entrepreneurship. I think that's an oxymoron. I think solo entrepreneurship just doesn't work because it is a team sport, right? But what you are asking for people to do when they come into a startup is you're asking them to sacrifice. Right. And even if you're the founder or the co-founder or the early people in there, starting an early stage company, whether it's tech, whether it's insurance, whatever that is, it is a hardship. Okay. It takes mind, it takes focus, it takes those things. So I consider looking at the benefits that are offered as peace of mind. Okay. Because it's one thing that we take off their plate. And if we look at the economics of what that means, performance, right? They're no longer worrying about those types of issues or going on the marketplace or the market. I mean, think about all of the startups, okay, that were all in the marketplace that effective January, every one of their employees doubled their premiums, right? Tell me that's not a mind game for people. And in order to be in an organization, in order to grow something new, whatever that new is, right, you have to have your head all the way in that game. And so when you look at the benefits, now they might not be as rich as you could do if you went to a big company, but nonetheless, if you give them the option, if you don't think about your employees first, and who's coming on your team in an entrepreneurship environment, I don't believe you'll succeed.
Yeah, I mean, I think that the days of taking your employees for granted are over, because there's so much turnover now. Like my sister, she's 8 years older than me. She's been with the same company since she was 17. You just don't hear about that anymore. I mean, her son, after he graduated from college, he's worked for already like 4 or 5 different companies, right? I mean, he's like in his early 30s, and I'm like, that's pretty normal. Like every time he changes every 2 years or whatever, gets a promotion or makes more money. I'm like, that's pretty normal, Deb. It's not your traditional way of doing things. So I think it's really important that we talk about the competitive edge, because it is hard to retain good talent these days. Can you talk a little bit about retention and how to make that benefit package really juicy for their employees?
Even, what people I think don't appreciate it as much is even if you put a retirement account together and you don't have a match, okay, you're teaching them something. And I think that, people don't understand how things can accrue. They don't worry about the rainy day. I think we're in this instant moment where people are not planning. And so when I look at it, I look at medical, of course. Okay, because that's the biggest thing. And there's not much we can do of where premiums come in and things like that. And I've been an Insperity customer. I've been a customer of a lot of the different companies that are, pool all the employees and do it. Okay. And that's a great option. Okay. But even if you're using something like Gusto for payroll, okay, Gusto gives you that ability. In fact, I didn't early on have benefits. It was just me. But being able to set up those medical benefits with Augusto, being able to set up even a retirement plan that they can go into, the thing becomes, how many people do you have? Do you have enough people to offset the cost? I mean, I always say that all these people in the benefits business, I think they're in the sales prevention business, okay? Like, how are we making it easier for people to adopt these things? So I do always do a copay. I mean, it's one thing to offer benefits and then say, okay, but by the way, it's full. So, but what it gives you the ability to do is also when you're retaining people, let's say that your benefits at the very beginning, you have a small copay and no match. Just an example, okay? But as you grow and as the company's more successful, right? Encouraging more benefits and giving more people more benefits, right, is a wonderful motivator. Okay. I actually believe it's probably a better motivator than just the cash. Okay. It's just as sticky because when they go out there and they've been in the startup and they go to the next startup and the next startup doesn't have any benefits and then they look at all these things, right? So I believe entrepreneurs should be looking at this as part of the retention because retaining employees is not easy, period. And to your point, there is no loyalty anymore. I mean, if you actually have been at a job for 5 years in a row, then they don't want to hire you. Remember the days, Haley, when I was young, I had to start a company because I switched jobs too many times. It's like, oh, I better start my own company because this isn't working out so well. But now, if you stay somewhere, what's wrong with you? You're not flexible. You don't like change. You don't do this. You don't do that, right? I mean, it's just insane. It's absolutely insane. But my point is that by being able to increase their benefits, not just give them benefits. Yes, that's a signal. But if you've given them a minimum benefit and you can start to enrich them with more benefits, that actually unconsciously is sharing that the company is successful. Not just me rah-rahing with my flag or giving somebody. And you cannot escalate the salaries of people unless they're making nothing. Okay. You cannot escalate the salaries of people commensurate with the growth of the company. It doesn't work from an investment perspective. It doesn't work from a funding perspective. So what are those other advantages that you can give them, right? And I'm not doing that. I don't see this as much in small companies, but this kind of speaks of a little bit of what we were talking about, Allie, the other day. Wellness benefits, depending on what that means, is also becoming a thing. And I think we're going to see a lot of maturity in what that actually means.
Well, yeah, I think that's really good point because, January 1st, your cost of health insurance is going up 35%. That's not sustainable, right? There's no company that's going to sit down with an employee and say, all right, your salary is going to be $100,000 and your benefit package is going to be $150,000 because that's the cost of your health insurance now, right? So I think we really do need to work on getting some programs and some products in place that can help people reduce the cost of their benefits so that they can actually hire good quality talent. And it's not just about the healthcare that they're going to receive.
It's not just about the healthcare, and it's because you know what? No one is planning. All we talk about, my least favorite soundbite. I mean, we've been talking about this for years. The largest transfer of wealth of all time. Okay, yes, we got it. Okay, we got it. But like in the meantime, you got these kids making so much money, but the way in which they're making it is not sustainable. Okay. It is not a lifelong, and so all of a sudden, and I could get on all my soapboxes. I could get with the NIL and all that crazy money that has no guardrails, right? or, your influences that are making it, right? These are all point in times. And without the proper structure of the other types of benefits or looking at the things they spend money on or the advisors, and listen, I'm a technology person. I love technology. Okay. But you can't get your advice on what you're supposed to buy and sell from Instagram. There's this 14-year-old kid I follow. I'm not kidding you. Okay. And I just for grins, I started looking at his pics and he's pretty good. Okay. I don't know if he's using his quad or his bot or what he's doing, or his dad works at Black. I don't know. Okay. But all I know is this 14-year-old kid is out there doing this and people are listening to him. Okay. And then I'll speak for my son. My son, interestingly enough, who is an unusual young person, but he's traded on his own a lot more through the robo, and he's done okay. But what he's done is he's invested in things he likes. Like he was a Chime customer. So when Chime's IPO came out, he bought Chime. Guess what happened? Chime's IPO didn't last so well. We might want to cut this out perhaps. But but seriously, ladies, then he stopped banking at Chime because once the IPO happened, once he realized what was going on, once he got all the fundamentals that he didn't know just as a banking client, because he got mad at Bank of America where I took him as a child. Okay. He realized what happened, so it's kind of this cyclical, weird world where they're learning things. Do you know how many kids I know that are invested in Poppy, that soft drink?
Mm-hmm.
Okay.
Yeah.
So my point is that we need to do better. And I think that some of these things, we need to start pushing. They're not doing it at universities, but as we all know who have had kids that have gone through school, maybe this should be like shop class was in high school when we were young.
Yeah.
It's like a shop class, right? Where these things are coming up because they're really not teaching in the fundamentals. Yeah, they learn about a balance. But these important things in life, which are critical, which they don't think about, and just starting your brokerage account on one of these easy ways that you put your money out there and you start making money and you're just trading your own brokerage account and you're not looking at the full picture in your life cycle, it's going to just get worse, not bad.
Yeah. So where are the tech startups? Where are these owners getting their information from as far as, starting a business from the ground up? Do you think they're also looking at influencers and what they're saying and kind of following in those footsteps, and they're missing steps?
So I think we should break it out into a couple buckets, okay? Because it's trickling downhill right now, okay? So let's take a founder who's got a great idea, maybe worked at one of the banks, building a wealth tech, leave it, right? Well, this guy, what he does is he calls up his friends and says, I need to be introduced to VCs, okay? So if you're going out early and if you're taking the path that you want to talk to capital people before you have even a viable MVP or something tested, and you get into the venture land, you're going to get venture feedback. Venture feedback focuses on revenue, focuses on customers, is not focusing on well-being.
Can you explain what MVP is?
I'm sorry. Minimum viable product. And what I mean, minimum viable product means a lot of things to a lot of different people. Okay.
Sure does.
To me, a minimum viable product means you have built a product that is functioning as it would, but not probably scaling yet. Okay. Minimum viable product means you start to onboard customers. Minimum viable product does not mean onboard customers for free. Okay. Minimum viable product means you've got a product that is capable of doing the function that you need to do. And you're going to go out and look for what I would call your initial cohort. Who are the people? Does anyone want to buy this? Okay. But what many founders in any industry, they get that idea and they think, I'm good, I can go raise money. Because they see all over social media, I get venture capital, I get this. And then they spend an inordinate amount of time spending their time talking to no one that will buy their product. They will spend no time talking to no one that will give them the proper advice about how you fund. The venture capital guys keeping them in the pipeline. They're not saying, go ask grandma. They're not saying, what assets do you already have? They're not saying any of that. They're not saying, how do you attract people? How do you look at it, right? So, I've got a company in stealth. It's coming out, okay? The second thing I did after I got my EIN number was I bought insurance on the company. Okay. When you bring founders on, you ask them how many times do they buy their D&O and their corporate insurance before they hire anybody or before they raise money. Usually, not often. Okay. We can talk about that another day. I mean, that insurance, once you sign and you are the owner of a company and you've registered with the IRS, you now have a business liability. Okay. And so depending on the founder, right? That's the one that goes kind of venture capital. You may have a younger kid. He's going to mom and dad, probably. Mom and dad may, I always say though, if your mom and dad don't invest in you, you probably don't have a good idea. Mom didn't give you a little bit of money, right? Probably not a good idea. But you have to look at the cycle. But as we talk about insurance, both on retirement, medical, life, health, we cannot ignore the thing. And if you go to CSC, which is a corporate registration company, Harvard Business is another one up there, right? They go in and they get you your bylaws and they get you all of these things. They give you a nice little packet. I'll show it to you, right? And even a seal. So you can seal your documents like, 1972. But they don't put in there, you should go get insurance. What are you going to do for your employees, right? No, none of that stuff, right? And so if we look at insurance, it's assets and liabilities, right? It's reducing your liability in a lot of cases, but it's also increasing your assets. And I think that it's an education that no one's getting anywhere unless you're lucky enough to have somebody that's either done it themselves or someone in their family that is in that business, a friend or a family that's in that business, to give them that advice. But you don't see that. How many business books do you look at about startups and find that in the book? None.
And does getting insurance early on, does that help you with scale and valuation at all?
I don't know if I would articulate it right back to valuation, but I would bring it back to scale. Because, if you walk into let's say you're selling into insurance companies. I don't care. Name me one big one. Okay. The one thing that startup has to get through is vendor due diligence. Okay. And if you're walking into a major insurance company, they're going to ask, and this is my favorite thing to say to insurance companies, they'll come back and say, we need a minimum amount of liability insurance for your business. Okay. Which is fair. But then if you're a startup, it's my favorite thing to do to insurance companies. And I'm going to go back and say, well, that would be really awesome if you'd underwrite me for that amount of insurance, but you will not. Okay. So therefore I have this amount of insurance because that's a maximum I can get underwritten for. Does that do? And they're like, yeah, that's okay. Right. But they have to teach their other people that. So it does help to me as far as I'm concerned in go to market, because it's one less thing that you have to do after the fact. And anybody that's going to buy your product, other than maybe a B2C play with a consumer, okay, any organization, mid cap, large cap, doesn't matter. They will require your business to be insured. They will require the directors and officers to be insured. Instead of waiting for the venture capital guy to come in and say you have to have insurance to protect yourself from death, right? Mm-hmm. This is the type of things that if somebody puts their house in order, it will help you scale faster.
What do you say to those older people that are branching out on entrepreneurship and maybe they aren't going to qualify for, key man insurance or that kind of stuff? I mean, obviously they can still get business insurance, but what about something to protect them for that? What are some other options that they can use that you've seen that have been really a good option for venture capitalists or when they're raising money to be kind of equal to that?
Well, I think that venture capital people will also look at your own personal responsibility of the things that you've done in your life. Okay. Yeah. So, if you may not be able to get key man, I mean, that's a different situation, but that means you're lieutenant, you're number two. I mean, it's hedging, it's coverage, right?
Right.
But at the other point in time, if you are a mature founder, okay, and you're taking this risk, and you haven't protected yourself personally from, just use disability as an example, right? So I think that the older the founder, they get under more scrutiny, because if they haven't done this in their own life, then I think that that's a question relative to, are they, no matter how smart they are, no matter what big company they worked in, are they qualified to be a scrappy founder? Because it's not luxurious. You built your own business. You guys know that.
Yeah. I know every time we have a new product come out, I'm like, am I ready for this again? You know what I mean? It's like every single time, right? I'm sure with your nonprofit, sounds like a passion project too. So like, you know, obviously some of those are the best way to get you rejuvenated to want to start at the beginning again. It's not fun, you know. The beginning is, you know, sucks in the beginning. Hours are long, and the money and the recognition isn't always, you know, the same as once you've spent 15, 17, 20 years in building something. So
I always tell people, if you want to be, I said, here's the thing to look at, right? And entrepreneurs are absolutely out of their mind, you know, particularly like in financial services where I've been my whole life. Okay, you risk your family and your life and your money, and you're building things for people who don't want to talk to you, right? I mean, like that's a mental health issue.
Well, so you've seen the highest levels of businesses and the scrappiest startups. So what's one mindset piece of advice for founders to adopt, and one that they should absolutely throw out the window, leave behind?
The number one advice is that if you don't believe in yourself, right, and forgive yourself for all of these things, because too many founders will come in and show me a picture of 15 people that they think are smart and like what they're doing. Okay, so number one is you have to be your own number one fan. Okay, and you have to know, and you also, if you have a family, you have those things, you have to make sure everybody's on board, because you know these things, it takes the people behind you that live this life right alongside of you and take the same kind of hardships. What was the second question you asked me?
What is a mindset that founders should leave behind?
Leave behind when they start?
Yeah. So what's a mindset they should adopt, and then what's a mindset that they should drop?
Well, this is a notorious one, but everybody says it, but fail fast. But what I mean, you know, and I'll give fail fast faster. I just dealt with a situation today. Everything, you know, listen, what you have to do is you have to start every day new. If you carry yesterday's baggage alongside you, you carry yesterday's tragedies alongside you, right? Maybe something didn't work out, but you have to be able to get up the next day as if and put your game face on. There is no time for mental health days. There is no time for wallowing in our problems, right? There is no time. And as the leader of that organization, okay, you have to be able to identify the people on your team very quickly who are capable of that and not. Because one person on a 5-man team could drag down the whole team.
Yes. I mean, that's such great advice, because we just recently had our national convention, and our CEO that we partner with, he talked about noise and signal. Like the noise, like, you know, Elon Musk is all signal, right? All day long. He doesn't even have noise. Like he sleeps in his office if he has to, right? To make sure everything's working correctly. So, I mean, that's probably not the balance that you want. Maybe when you're first starting, you might have to have that much signal. But if you look at cutting out all the noise, you know, I mean, obviously right now with everything that's going on in the world, there's a lot of noise that you could get sucked into. Interesting fact, my son turned 13 last week, and so his grandparents were in town. So my husband and I are talking like, why do all of the grandparents like to watch the news so much? Like it seems like retired people are like more into the news. Like I never watch the news. I mean, I get my information, don't get me wrong, but I would never sit down and watch like any of the channels. So I'm like, what is it with grandparents always wanting to watch the news? You know, I'm like, we cannot watch this with my 13-year-old around. We don't put this kind of junk in front of him, you know? So it's like really being able to take the next thing that's coming and to fail fast and to fail faster and to start every day new, I think is such great advice, because that really is being able to identify quickly what the signal and what the noise is, and staying focused on the things that matter and letting go of the things that don't. And like you said, if you have 5 people on a team and one person isn't pulling their weight, or they're too focused on politics or sports or whatever the case might be, they can get dragged down really quickly because they're not focused on the same mission and the same goals and going the same direction.
Well, and the more people kick in, right, unconsciously, it's giving them reasons why something can't be done, because everything is changing on a dime, right? And so you start having people think about the reasons why something's not possible versus why it is possible. Okay, because and that is some of the problem that we've got as you know, and I know that, you know, we didn't have any guardrails with the internet, right? And now we're rushing into this world of AI, right? And there's 2 things I tell people, right? On that one thought, at the end of the day, when you're going to bed, and we say journal, I mean, all this stuff that we're supposed to be doing, okay? Like everybody has all time for that. They don't. Okay. But what I do, and what I encourage other people to do is before you go to bed at night, write down one thing about how you're feeling. Happy, sad, anxious, or whatever. Just one word if you can't journal, right? But the other thing for startups, other thing for early stage companies, if I looked at my day, what could I have delegated today? Because what happens is that you're starting a company, right? And you think, oh my gosh, I need more engineers. Oh my gosh, I need more social media. Oh my gosh, I need more content, right? Whatever we think. But if everybody in your organization is writing down what they could have delegated today, you really start to create jobs, or you'll start to create now with the addition of AI workflow. Okay. And I think it's going to be more important than ever. I've been doing it for a long time, but I think now it becomes then when you get back together as a team, you may not need another engineer. We may just need a better repository for CRM because we've got everything everywhere else, right? So I think we've really got to be more wise about that. And don't get me wrong, it's part of that. The well-being of your employees important, which brings us back to how we came to talk today. So I really believe that the benefits that you offer them, the softer benefits, not just cash, okay, become incredibly important because that's also another part of trust. They did something, they were there, they said, when we do better, we'll get better benefits, right? Well, those are the things that kept all of us employed that are a little bit older than some of the younger people for a long time, because that was a competitive edge. And I will tell you, big or small, that loyalty doesn't exist and the institutions aren't looking back. Yes, they've all created wellness day. You get a wellness day, you get a wellness break. That's not the same, guys. Let's just go backwards and look at the things that wellness really was. We could go to the doctor when we wanted to go to the doctor, and we didn't have to worry about how much it was going to cost and how many doctors we had to talk to before we went to the doctor.
Yeah.
Wellness.
Well, hopefully we can find a plan that helps the smaller businesses, because right now the wealth care is for 10 or more employees. But after talking to you, I know there's an importance of helping those smaller startups as well who may not have 10 or more employees.
Can I throw out a question for you guys to think about? Right?
Yeah.
One of the things prohibitive on corporate insurance is adding dependents, right? It's not as, the dependent thing, me as a single individual, it could be a good deal. Me adding a dependent may not.
Mm-hmm.
Okay. So maybe there's a play on some of that. So could you look at your collective group of people? And if you had 5 people, but those 5 people were either married, right? So that's 10. And maybe they have kids, so then that's 20, right? Maybe there's a solution that says we could start looking at overall participation through a corporation. I mean, that's my innovative throw out for the day.
Well,
Yeah,
right
I
now,
think that's a really good piece of it, because some of the benefits are for both. I think what we also are really looking to create a solution for is for those solo entrepreneurs that maybe they're 1099, or maybe, in the insurance industry, many of our colleagues are 1099. So how can we even provide this benefit to those people, whether that's through a payroll company or PEO or something like that? We have to figure out ways that we can bring these great services, not just to companies that have 100 employees, but companies that might be a solopreneur too. So I think we're working on that. I don't think we're there yet, but obviously with us rolling out this new program, it is going to be a little bit of catch up on some of those holes that we have. I mean, I just talked to somebody today about ACA, how we don't necessarily have a way to support employers that might have a lot of people that are in the ACA. And of course, things have changed, but those are ways that we can really start redefining the plan for those smaller companies that don't have as many resources, but do have a population that are maybe part-time or something like that. So I think we're on the right track, but we're definitely not there yet. So I appreciate that feedback, because it's definitely something we can move forward towards.
No, I think it's interesting. The other thing is, I don't know if I believe in just giving, startups will give people, they'll say this part of your cash, so I'm going to pay you $1, but I'm going to give you 50 cents. I'm not using real numbers. And you go buy your own insurance. Okay.
Yeah.
People don't do that. Okay. They don't. They go and spend the 50 cents. And that's the problem, I think, with some. I'm not getting political, but I'm just saying, all these ideas thrown out. We've got to figure out a way, and we know the underwriting. We all know the problems around it, okay? But for these, we've got AI coming. It's going to change the world. If we have sick people, if we have tired people, if we don't have people that are planning for the future in some way, shape, or form to protect themselves, and that's what insurance does. And it's not just your life and your health. It's your company. It is your money. There's so many ways of it. And I just think that we don't bring insurance enough into the conversation of growth and entrepreneurship.
Yeah. Well, thank you so much for coming on again, Pam. I swear we could talk for another hour with you.
Yes. Part 3.
Well, I love it. And and if you guys ever want me to run a survey for you, you let me know. Right? What do people like? What do they don't like? I've got good access to people. And if we ever want to create some kind of survey of what this looks like, start benchmarking, feel free to count me in on that mission.
Awesome.
Yes.
Thank you.
Well, we'll put your contact information if anyone wants to reach out to you and maybe work with you on the Founders Arena. Are you guys, you're looking for 6 more or new?
We are recruiting right now. Right now for cohort 6. And then also, we are a nonprofit, so we do exist to help all of these founders. I don't look for individuals, but certainly organizations are benefiting greatly for us. So we are a nonprofit, and we survive on that. So I thank you for allowing me a shout out on that.
Of course.
Yeah, absolutely.
All right. It was a pleasure having you. Thank you, Pam.
Thank you, Pam.
Thank you.